Hello, everyone. Good morning to you. Welcome to another edition of our Forex Money Mastery. In fact, the last session for the month, sorry, for the week. This week has been challenging for me actually as regards to managing trades. And in fact, we are going to be seeing what had happened through the course of the week, though we had some significant opportunities which I never took. I missed out on them due to some schedules I have behind the scenes. And we are going to be looking at the challenges I faced today. We are also going to be looking at the development in the market so far, and of course, how markets participants had reacted to latest shift in the market dynamic. And we're also going to be taking into account the fact that today is the last trading day of the week. And we all know by now, especially for those of you who have been following me for a while now, that it also comes with its own psychological peculiarity where market participants may want to start taking profit ahead of the weekend. And as a result of this, we might see price action move in the opposite direction of the prior leading price action. And we are also going to be looking into the performance of the assets we are monitoring so far this week, how well they've done, and how we intend to prepare for the final trading day. We've been monitoring three financial instruments so far this week, which includes the USOILSPOT, the GBPUSD, and of course, my favorite, the XAUUSD. And if you're a fan of any of them, you want to be staying tuned in so that you do not miss out on any of the valuable ideas we will be deliberating on today. Good morning to you, Sam. Good morning to you, C40. Glad to have you around with us this morning. And for those of you who are joining me for the first time, you're highly welcome on board. Very, very excited to have you around with me this morning. The Forex Money Mastery is an educational platform where we all come together 3 times in a week, Mondays, Wednesdays, and Fridays, to have a deep understanding into the behavioral patterns of market participants and using this data in conjunction with fundamental factors to decide and strategically position ourselves for the next move. So you're welcome, and I also encourage you to actively engage in the comment section. So with that being said, we will be diving right into the business, and do not forget to give the video a thumbs up. Your likes are very valuable to me and for this community. In as much as it goes a long way in inspiring me to continue to do more, it also help the algorithm to push the video to a wider audience of traders who may find the content beneficial to them. So thank you very much, guys. Let's make the number of likes tally with the number of people on board. So with that said, we will be diving right into the business. And as always, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. Please, I would like to take some time. We're having some technical issues at the moment, so let's resolve this, and I will be back shortly. So please give me a moment, please. I will be right back. All right, everyone. I'm sorry for that break. Thank goodness things come back up, so we are good to go. So the first thing we will be doing, as always, is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today, Friday, January 17th. And also, we will be taking a review of what had happened through the course of the week. Let's see what had influenced the market sentiment so far, and of course, how market participants had reacted to this event. So, based on the asset we are monitoring for this week, we have been focusing on impactful events from both the United States and the United Kingdom. And so far this week, we had a handful of important events from both economies. Now, the first one here came in on Tuesday, that is January 14th, and we had the let's see here, the producer price index, a data that measures the average change in prices that producers receive for their goods and services. And of course, I did mention that this is a key indicator of inflation at the wholesales level, where rising PPI, that is, if the data comes in higher than what market had expected, it could suggest increasing production costs, which can lead to higher consumer prices, in other words, inflation, and could potentially prompt the Fed to raise interest rates. And at the same time, it will influence the US dollar currency asset positively. And of course, if the data comes in lower, it might indicate lower inflation. And if you look at what the actual data says here, it came in at 3.5%, which was in fact lower than what market had expected, though a little bit higher than the previous month data, which was pegged at 3.4%. So it wasn't something majority were looking forward to, and as a result, it did not favor the US dollar significantly. Then on Wednesday, January 15th, we were looking at the consumer price index from both economies. I hope we all know what consumer price index is. Unlike the producer price index, it is the measure of average changes in price of goods and services within the consumer sector over the last 30 days. And it's also considered to be an indicator for inflation level in the US and the UK economy as well, where if the CPI rises, it shows that inflation is on the table, and if it drops, then it shows that inflation is declining. And if we look at what the data says here from the UK, we saw that the actual figures that came in were lower than what market had expected on all ramifications. In fact, if you look at the month on month, the year on year, and the core consumer price index, we see there was a projection of 0.4, 2.7 and 3.4% respectively. And of course, you can see the actual data here in red, all of which came in lower, and this did not help the British pounds at all. In fact, I lost a lot of positions on the GBPUSD this week as price continued to go through choppy market condition. In fact, it was really terrible, and at a point I just had to stop taking trades. That was yesterday, I think during the later part of Wednesday and yesterday's trading session on that one. And it appears we are seeing some traction in the GBPUSD this morning. We are going to be looking at that to see if we are really going to be trading that asset today or not. Then we also had the consumer price index from the United States and Wednesday as well, where we saw the month on month coming a little bit higher than the previous month and what market had expected. We saw an actual figure of 0.4%, which was a little bit interesting, which could also stop the Fed from cutting interest rate further. But I don't think this was strong enough. As you will see, the year on year came in just as what market had expected at 2.9%. And of course, the consumer price index excluding food and energy for month on month came in as expected, and the year on year came in below market expectations. So it was more of a mixed data coming in from the United States there, and the 0.4% doesn't seem enough to make the Fed maintain interest rate at this point in time. So the sentiments in the market is gradually shifting towards a potential interest rate cut in the next Federal Reserve meeting. Then on Thursday, things did not, this made matters worse for the United States dollar. As we saw on Thursday, January 16, the retail sales data came in lower than what market had expected. Remember, the retail sales data represents the level of consumer spending in the United States as it measures the total receipt of retail stores in that country. And look at what the data came in at, way below what market had expected. In fact, it was further way below the previous month data, which was at 0.8%. So we saw an actual figure of 0.4% on the retail sales data, which shows that the level of spending in the United States has drastically reduced in the last 30 days. And this doesn't seem promising for the US dollar as well. Then on Friday, we saw this morning, January 17th, we saw the retail sales data from the UK, which also came in way below what market had expected at a deficit of 0.3%. And in fact, for those of you who are monitoring the GBP USD, you'll see that this morning the immediate reaction was massively against the British pound, as we saw fresh supply go through the market following that disappointing UK data. So it has been more of a mixed reaction this week. Nothing really significant that could actually push price in a particular direction significantly. However, we were able to see some significant traction on the USOILSPOT and the XAUUSD, which we are going to be looking at in a moment. So with that said here, and with no other major impactful event coming up later today, or let's filter in and include the mid-tier economic features. Let's see a broader view into what market participants might be looking forward to. So today, okay, we are looking at something from the housing sector, another sensitive sector in the US economy. We are looking at the building permit coming in 1:30 p.m. UTC today. That's about 2:30 p.m. local time. And expectations are lower than the previous month, and the housing starts to as well same time 1:30 p.m. UTC. Expectations are a little bit higher than the previous month data. Well, major key players could still look forward to this data to decide fresh cues into what to expect around the US dollar market dynamic. However, we are going to be taking some moment to look out for structural details that will guide our trading decisions for today. So with that being said here, let's dive right into the business. And as always, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And as you can see here, I missed out on this move yesterday, on Wednesday, after that choppy market condition. I missed out on that one. So let's quickly look at what has really been happening in this market since the beginning of the week. And for those of you who are with me on Monday, remember we had this range bound structure identified where price was for the first half of the week confined within the $77.50 area and the $75.75 level, emphasizing the prevailing uncertainty in this particular market. And if you remember, at the beginning of the week, we were witnessing this engulfing bullish candle which opened the market following the sanction on Russian oil vessels and Russian oil companies as well. And we had a very strong feeling at the beginning of the week that price of crude oil is going to rise, especially following last week's crude oil stockpile report, which shows a decline in the US stockpile. So with all of this, we were highly hoping that price will rise to the upside, but instead we saw a choppy market condition. Actually, price kept on consolidating. Then at a point in time, we saw price break down this ascending trend line to signal a sell-off, which of course we took advantage of. At the end of the day, we were not able to take any significant thing out of it. So for me, on my portfolio on the US All Spot, I'm in red at the moment. I'm in red, but let's look at the major drivers that are influencing this market so far. At the beginning of the week, we talked about the sanction on Russia, which was a positive factor. We also talked about the decline in US crude oil stockpile. But recently, we have some new development in the market coming in from China, where there is a potential signs of recovery in China's GDP, retail sales data, and industrial production, which could boost oil prices at this point. Remember, China is a major consumer of oil in terms of the global landscape. They are the highest importer of crude oil, and it is expected that if their economy is doing very well, chances are high that demand for crude oil is going to rise. So based on this, we could see some traction in favor of crude oil prices. And if we consider what happened on Wednesday, where price action finally broke out of both this trend line and our resistant line for the week at the $77.45 level, and look at it technically, price is back to retest the structure whereby pressure resumed again, giving us signs that the momentum is still looking very bullish at this point in time. Now, additionally to the China's economic recovery hopes, we also have recent report from analysts will forecasted that there will be a 1.4 million barrel per day increase in oil demand due to heightened travel activities in India and China during the festivals, that is the Lunar New Year situation they are having there. It's a report I read this morning as regards to this, and the hope that there will be increase in oil demand is another factor that could influence US crude oil at this point in time. However, if we consider the technical overbought situation in this market, remember oil prices is now at a monthly high around it hits the $79.50 level for the first time in about a month. Let's look at the daily time frame to have a quick review. Okay, the last time price was at this area was in July of last year. So if we consider the overbought situation on crude oil prices, you will agree with me that we will not want to ignore the potentials that sellers could also come into play. And as a result of this, there are other factors as well which we I just lost my please give me a moment, please. Let us sorry, please give me a moment. I just had some technical issues now. I will be right back. I will be right back in a moment. Thank you. All right, sorry about that. Thank goodness we are back on. So I was talking about the possibilities that sellers could also come into play. And in fact, if we look at the fundamental factors that is driving the sentiment in the market so far, recently we have the ceasefire deal between Israel and Hamas, alongside with expected Houthi um, intention to halt attacks on Red Sea shipping, and this could remove some of the geopolitical risk on premium commodities like oil. And for me, this could incite some bearish pressure, especially when price is at a supply niche at this point, that is around a overbought situation. Considering the last time price was here was in July last year, that's over 6 to 7 months. Now, we also have the stronger US dollar at the moment, where the Federal Reserve cautious stance to cut interest rate may support the US dollar. And we know how the US crude oil is a US dollar denominated asset. And if the value of the US dollar continues to rise, the commodity, the oil commodity, becomes very, very expensive for other currency assets to buy, hereby putting pressure on oil prices, reducing demand for oil, and at the same time, supply will increase and price may crash from this particular area. And then, if we take this dynamics together, we take all of these factors together, it appears that we are at a break-even situation. We are at an equilibrium where anything could actually happen. Now, for us to navigate this, for us to understand how market participants are digesting this information, we will need to look at the structural details on the chart that will give us a clue of where price is likely going to go for today or for the next week. Now, looking at the structure on the chart here, you would agree with me that price action is still sitting above an ascending trend line. In fact, we have a couple of them here. We have one right here, and I think we have another one right here. So price is still sitting above the trend line, and you know how we use our ascending trend lines in this community. As long as price remains above them, we want to be looking out for patterns and structures that support the idea of buying that asset. And the only condition that will make us sell is if this ascending trend line is breached and broken to the downside, which is yet to happen actually. And in that regard, I want to continue to maintain a bullish bias as long as price remains above the trend line. Now, in that regard, I placed a buy this morning with the hopes that price will continue, but it's still struggling. This week has been terrible for me, sincerely, on the US crude oil. However, such things happen. So this is where risk management comes into play. You try not to risk too much so that even when price does not go your way, whatever you will be losing on that trade will be more or less insignificant to really affect you emotionally. So weeks like this come, so we are obviously still going to be around to take advantage of opportunities when they later come in. So at this point in time, I still maintain a bullish bias in this market. I'm looking forward to more opportunities as long as price remains above this trend line. Now, if I think we also have another level here. Let me mark it at the $79 area, another psychological level where if price action breaks out of that structure, I will be willing to add more buy position. But mind you, we're not just going to be placing a buy stop order here. We want to see price break out, retest the structure for confirmation's sake before we jump into that uptrend move. Now, in as much as we looking out for buying ideas based on the current market structure, we cannot ignore the potentials that sellers can come in. We talked about the ceasefire agreements between Israel and Hamas, the Houthi situation in the Red Sea, and of course, we're also talking about a stronger US dollar at this point in time. Now, if we take those two into account, chances are that market participants may want to be taking some profit ahead of the weekend, because we never can tell what could happen during the weekend due to potential escalation, and the market will definitely be closed. So they might want to take some profit off the market, and as a result, we could see selling pressure come in at any point in time. So for me, if I do want to consider selling the US All Spot at this juncture, I would rather want to see price break down the second ascending trend line, which interestingly shares a confluence with that $77.45 level. Now, remember the $77.45 level. This level was our resistance line established at the beginning of the week, and if price can come back below that trend line, remember this resistance line, this resistance line had been a strong selling niche throughout the first half of this week, as buyers found it difficult to break through. Now, if price drops below that $77.45 level, price would have broken down that ascending trend line, and for me, I will consider this a selling niche where I want to be looking out for selling ideas, maybe back into the $75.82 level, dovetailing to a minimum of 100 to 150 pips to catch there if price ever moves in that direction. But trust me, I will be giving us updates on my Telegram platform if there is anything new that comes up or evolves before the New York session today. So, like I did say earlier, still maintain a bullish bias here. We'll continue to look out for more buying opportunities around this area as long as price remains above the trend line. So this is my simple view on the US All Spot for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 5-10 seconds. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. Good morning to you, Sam. I just saw Sam's comment now. Sam says, can you explain price action, please, and supply and demand zones? Well, I think that's what we've been talking about since. We've been talking about the fundamental factors. We talked about the supply areas. We talked about the demand areas. And of course, we've been talking about price action basically. So I'm not sure I understand what you mean there, Sam. I would really love that you clarify that. We're talking about price action, honestly. Okay, please clarify if I'm not on the same page with you. I really appreciate that, and I'll be willing to explain further. Namaskaram Harun Manjun, good morning to you. Thank you very much. I wish you also the same. All right. In the absence of no further questions, I want to assume that we are all on the same page. And in that regard, let's move right into the next asset on our watch list. Stay tuned in. So the next asset we are looking at is the GBPUSD, that is the British pound against the US dollar. And like I did say earlier, I had to stop trading this asset yesterday. I didn't take any trade yesterday due to the choppy market conditions. In fact, I had over 5 losses. Is it 4 or 5 losses on this asset through the course of the week, trying to capture that uptrend scenario? But unfortunately, I keep get taken out every single time, further emphasizing the prevailing uncertainty in this market. And of course, the recent data from the United Kingdom is not helping matters at all, as the GBP USD continues to experience fresh supply following that disappointing retail sales data, which came at what was that again? Let's look at it together. Retail sales data came in this morning at deficit of 0.3%, way below what market participants had expected at 0.4%. Now, with the way things are going now, if we consider the market drivers behind the scenes, the Bank of England still has room for monetary easing sincerely, which could favor the British pound in one way, where the Bank of England's acknowledgement of cooling inflation provides flexibility to adjust monetary policies, supporting a long-term economic growth. I'll repeat that again, a long-term economic growth. So we are not talking about favoring the GBP/USD in the near term. So we are talking about a long-term situation. And if we are going to be looking out for buying ideas around this area, especially after seeing what happened this week, we will focus mainly on the higher time frame. And I'm beginning to think that I might not take on the GBP/USD next week. Maybe I will just move my attention to the USD/JPY. Well, time will tell depending on how price action closes this week. Then we also have a soft landing outlook in favor of the pound, where the Bank of England policy maker, that was Alan Stallers, in his statements yesterday on achieving a soft landing, where he suggested a balanced approach to rate adjustment, which could benefit the British pound in the long term too. So if you take these factors, I don't see any potential for buying in the near term right now. And if you're talking about me, who is a swing trader, I usually look out for minimum of 100 pips moves. And from the way things are going right now, it doesn't appear that a long-term bull is a possibility. Yeah, the last time we saw a strong bullish move this week was on Wednesday, and in fact it was about 97 pips move. No, sorry, how many pips? It was about 87, 89, 90 pips move. And you saw how price dropped significantly back to the downside. So it shows that buyers are not really strong at the moment. And why is that so? Well, we've talked about the weaker retail sales data. We've talked about the disappointing core retail sales from the UK. Then we also talked about the rate cut expectations, where market are pricing in a 25 basis point rate cut. I talked about this last week in February, with a total of 50 to 75 basis point reduction over the next 1 year, which could weigh in on the British pound by reducing its yield appeal. Now, for me, the path of least resistance in the near term is still looking to the downside. And for the fact that we had an engulfing bearish candle slicing through our key level for the week, which is at the 1.2200 area, and you know how we use our key level. As long as price remains below that structure, we want to maintain selling ideas. And secondly, we can see this ascending trend line has been breached and broken to the downside. And don't forget, at the beginning of the week, our resistance line was established at the 1.2200 area, making it a strong supply zone. Every attempt that buyers had made around the 1.2200 area has further confirmed that sellers are strong here. As you can see, it failed at this point, it failed here. And the only time it broke that structure on Wednesday, we can see what happened. Immediately the next day, we saw price drop below the structure. Yesterday again, there was an attempt by buyers to break through, but right now you can see price has broken down the structure, making it a supply zone for me. And with price action trading around the supply niche, for the most part of the week, I think it is high time we start considering selling. Now, let me zoom into the structure here. We already have price break down the key level, retested it, and it appears it's going to the downside. Let me check. I think I placed a sell mid limit order here. Oh, I missed it. So I will just place a sell right away from this point. So I just placed a sell right now, and stop losses will be way above the structure. So I'm looking at 1.2210. That's about 25 pips of stop loss. So let me just place that one right now. So we have it at 1.22100 area, TP target 1.20 area. So for me, at this point, and considering that price is still trading above our key level, I'm looking at a downtrend scenario, at least in the meantime. So let's see how the market is going to play out today. Will price continue to trade below the key level at the 1.220? If it does, we feel more comfortable in our sell position. And if price action continues to drop to the downside, a further breakdown of the support line for the week at the 1.21250 will be welcoming more selling ideas. So let's see how this is going to play out. I wish us the best of luck on this one while we continue to monitor price action. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take another 5-10 seconds off to see if there are any questions before we move on to the next asset. Okay, so I see your question, Sam. Sam says, I just struggle remembering those concepts, especially when making a short sell. Still waiting for an epiphany moment on how sensible you can consistently profit off it. Okay, I just struggle remembering those concepts, especially when making a short sell. Still waiting for... Okay, so when we are talking about struggling, where is the struggling coming from? Are you excited, or are you feeling too anxious? We need to understand where the struggling is coming from, because when you struggle, and you're trying to make a trade in that mindset, it's definitely not going to augur well in the long term. So we need to understand why that is. So that means there is a confusion going on in the background, in your subconscious mind in one way or the other, and you need to figure out why that is. Now, most of the time, I usually say that I am an advocate of simplicity, so I try to make it as simple as possible. So if you're trying to annotate your chart, if you're trying to mark out levels on your chart, you need to write it out there and say, this is my supply zone. So if someone will probably forgets things, and when you do that, it causes it causes anxiety, and you begin to struggle to make decisions. So for instance, like I was saying earlier, that this whole area has been a resistant line, so that is why I marked it out. Definitely you do want to mark it out, so probably you want to be writing it out there. I personally, I know why. I know what this is. I know this is my resistant line, which is obviously the supply zone. So if you are finding it difficult to remember and you've marked it out, please write it out there. You can put it supply zone. So what does that mean? As long as price remains below the structure, you want to be looking out for selling ideas. It's as simple as that. And if price breaks above the supply zone, what does that mean? It means that sellers are no longer having a say and that buyers are beginning to gain some traction. So what do you want to be doing? You definitely want to be buying. And that is what I've been doing since the beginning of the week, buying above the supply zone. But like I told you earlier, it did not really move significantly, and I keep getting stopped out throughout the course of the week, and this further emphasized the level of uncertainty in the market right now. So sometimes it happens where you take some losses. It's not a bed of roses all through. Sometimes you take some losses. Now the question now boils down to, what losses are you taking? How much are you losing on each of those trades? Is it too significant, affecting you? And if it's too significant, definitely you will not be in the right mindset to take the next trade. So these are things you also need to work on, which obviously you can learn that while we are here on the Forex Money Mastery. So I think my explanation is quite explicit enough for you to understand. So you need to figure out, why are you struggling? What is really happening? And from what you wrote here, I think probably you want to be writing out those zones, like supply zone. Mark it out there, so that you know that is. And if price remains below, just tell yourself, I only want to be looking out for patterns and structures that support selling ideas. And when I mean patterns and structures supporting selling ideas, we are looking at double top structures, head and shoulder patterns, rising wedges, and once price breakdown retests the neckline, then you want to be selling. Now, this is another thing you need to also take note of. So if you are looking out for structural details that support selling ideas, you must make sure that those structural details mature before you jump into the position. So for instance, if you're looking at a double top structure below the supply zone here, you definitely will have marked out the neckline of that supply of the double top structure. Then you want to be selling the breakdown retest of that neckline to join a downtrend move. So you must have a well-defined strategy, mark it out, write it out, and follow through those plans. It's not as easy as it seems, but with time you get to inculcate this into your arsenals and your skills. It takes time anyways, but I want to wish you the best on that one. So it says here again, anxious, but I don't actively trade. It's too risky of an activity that I don't see myself doing. I prefer absorbing knowledge from the variety of YouTube streamers. That's another problem. So the more knowledge you expose yourself to, the more information paralysis you have, and the more you get more anxious, because your mind start processing all of these streamers you've been listening to, and they will at some point antagonize each other in your mind, and then you will not know what to do at any point in time. So instead, you want to be following a very simple approach. Focus on one particular trading strategy. If you have your favorite streamer, focus on that person and don't copy other things as well. Just focus on one, and with time, just continue doing that same thing over and over and over and over again. There will be some times you will go through stream of losses. There are some times you go through streak of profits. So don't let it get to your head when you're winning, and don't let it get to your mind when you're losing as well. It's just a phase. And with that said, you did acknowledge that it is risky. Yes, it is risky. So that is why you want to have a well-defined risk management strategy in place. So what is risk? What is your risk appetite for every trade? This is subjective. No one can tell you this. Some people may find $100 cheap enough for them to risk. Some may find $50 cheap enough for them to risk. And some may find $10 cheap enough for them to risk. So it depends on you. So what can you afford to risk on the trade that if it not go your way, you are willing to take another trade the next time you see a new trading opportunity? So these are things you need to resolve within your own self. So I hope I help on that one. I hope that helps on that one. So I wish you the best of luck, Sam. All right. Okay. So, in the absence of no further questions, I guess we are on the same page on the GBPUSD. So I'm not looking for buy on the GBPUSD at the moment. So we'll continue to maintain a bearish bias as long as price remains below the key level, and look out for more if price goes ahead to break down, retest the 1.21250. So I wish us all the best of luck on this one. So with that said, let's move right into the final asset on our watch list. Stay tuned in. So I never realized that I was on mute throughout, and so I'm sorry about that. And let's quickly run through this again. So, like I was saying earlier, my swing trading did not do very well this week. And my scalping account did very well. For those of you who are part of the Go Go Challenge, we saw how we were able to recoup the losses we incurred last week by making over 6 to 7% of our portfolio. And hopefully, we will be able to build some more profits later today as we scalp the market too. The course of the week has been quite tricky, as you will see. The first half of the week, sorry, the first day of the week, we saw a choppy market condition, and in fact, within the choppy scenario, we established a bearish signal after price action broke down that support line at the 2,679 ish. And during Tuesday's trading session, we were thinking that this could continue the downtrend move. And in fact, I had a couple of losses trying to capture this bearish move around this area before price reversed and continue that uptrend scenario. And I think we had about a couple of simple trading setups on the lower time frame. So let's look at this together. So on Monday, we had a sell triggered where we were able to scoop in over 300-400 pips. And of course, during this old choppy situation, we relinquished some of the profit we made trying to capture the downtrend continuation, which never happened. And finally, when price broke out of this resistance line, it happened during the Asian session. So in this part of the world, we are sleeping at that time, and I missed out on this one as the price moved all the way to the upside. Then later on, was it yesterday? Okay, on Wednesday, we had another structure. Let me zoom in so we can see things clearly. So we had this trend line, and we were looking at potential of this support line to be broken to the downside, or price will maintain itself above the trend line. And yesterday, after observing this old choppy situation, you'll see yesterday I did not update with any commentary, and so I just stayed out of the market yesterday due to the uncertainty around the structure. And in fact, the data from this week are not really convincing, telling us where sentiment is really going. Look at the retail sales. Let's look at it again. We saw the producer price index from the United States coming in lower than market had expected, but a little bit higher than the previous month. That was one thing. The consumer price index as well came in lower than what market had expected, but higher than the previous month. So because of this dynamic, things were not really that convincing that price will go in a particular direction. So I decided to stay clear of the market yesterday, that hopefully we come back here today and see what is likely going to happen. So if we take into account, not again, I think I'm having Welcome back, everyone. Like I was saying, we hold on a second. So, taking into account the fundamental factors behind the scenes, where we have a stronger US dollar at the moment, there has been deep buying activity around the US dollar, amidst expectation of a pause in the Fed's rate cycle, which obviously is going to be undermining the demand for gold. We also have a general improvement in risk sentiment, reducing the demand for safe haven asset like gold. And of course, the part of least resistance is looking very more to the downside at this point, which could be a retracement move of that impulsive leg that started this week. And if we look at the last 18 hours or so, price action had consistently found lower highs. And look at this, connecting the series of lower highs here, we have a beautiful descending trend line to work with going into today's trading session. And you know how we treat our descending trend lines. As long as price remains below them, we shall continue to maintain a bearish bias. Then we also have a support line around the 2007 1250, which finally got broken this morning around the $2,712.50 level. So let me just mark that out quickly. You want to be doing the same too on your chart. Have price below that structure. The reason why I'm using this, okay, look at, for instance, yesterday we saw price break above the structure. We saw how sellers found it difficult to break through, making it a valid support line, or let me say demand zone to work with. And look at what happened during the early hours of today. Price finally broke down the structure, came back to retest it, and in fact retested it at a point where it shares a confluence with that descending trend line. So for me, the path of least resistance as at this morning is looking to the downside, and of course taking into account the fundamental factors favoring the US dollar as well. Now, in this situation here, I have missed out on the sell position here. So I will be looking at a potential price coming back to retest the structure to continue that downtrend scenario. So that's what I will be looking at. And of course, I will be updating us with new structures on my Telegram platform to guide our trading decisions today. And for those of us who are considering buying the gold today, I would only want to see price break out of this descending trend line and that 2007 1250 before I jump into a buy. So at this moment, we will maintain a bearish bias as long as price remains below the descending trend line and that level at the 2012.50, and we'll only consider buying if price action breaks out of both of the structures. So it's a simple trading setup. I will build up on this structure as we head into the New York session, and for go challengers, we will be scalping this market today too. So I look forward to seeing you in our session coming up in about an hour 30 minutes from now. So I think we've done justice to the gold commodity. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery.